It is Thursday, March 12th. Scott Riley with Market Update Desk, NMLS number 157524 with Mortgage One. It's going to go right into some of the data that came in today and then what's that affecting in the market and some of the things we're seeing for trends. Initial jobless claims was the main thing that came out today. Ending for the week March 7th, that came in at 213,000. That marked a decrease of 1,000 from the previous week period and slightly below the forecast of 215,000. Continuing claims also fell slightly, and we're down to 1.85 million. Now it's interesting. Only, I'm going to say 5 weeks ago, 6 weeks ago, we were butting up against 1.93 million. So we have seen a decrease in both initial claims and continuing claims. The other data point that came out today came in regards to the budget. So for the fiscal year to date, the budget deficit totaled 1.004 trillion with a big old T. But that's about 12% lower than the comparable period 12 months ago in 2025, as government revenue rose faster than spending. Customs duties have totaled 151 billion through the first 5 months of the fiscal year, up about 113 billion. So that has grown obviously quite a bit, 294% in fact. Net interest payments on the nearly 39 trillion we have in debt totaled 79 billion. That's with a big B in February alone. Now, that is more than any category save Social Security and income security and healthcare. It is a tremendous part of our outgo. Now, what we saw is the two Treasury auctions earlier this week, I'm sorry, came in graded a C plus and a D minus. Those were for shorter term Treasuries, the 2 and the 10. Today we get a 30-year auction, so we'll see how that comes in. It's probably going to be at best rated a B is my expectation. In regards to housing, the Commerce Department showed single family starts fell 2.8% from December to a seasonally adjusted annual rate of 935,000 units in January. Now that's down 6.5% from 12 months earlier. According to preliminary figures from the Commerce Department, single family starts fell 2.8% from December to a seasonally adjusted annual rate of 935,000 units. That's a 6.5% decline. Completions slipped 1% in January to 970,000 on an annual pace. We're not increasing, unfortunately, our housing starts, permits, completions year over year. It's not even keeping up with what 12 months ago were, and that has to do with some uncertainty in the finance area for mega builders. But as you can see from a home buyer standpoint, continuing to go forward, inventory is a problem. It's not getting fixed via what we would normally see new construction, and also the aging population are holding out of their homes much longer than ever in the past. So both those factors, which we would normally see help start to offset some of the inventory problems, are not coming in there. Interesting thing, the Senate on Thursday, or today I should say, passed the largest housing affordability bill in 30 years. This has to do with the bans on investors buying single family homes and holding them. Now, the vote was 89 to 10. Keep in mind, we're in a hyper partisan area. 89 to 10 is a huge thing. Now, what we're seeing on the House side is several different people have come out and said that there needs to be structural changes in the verbiage, because the concern is part of the verbiage is wanted inserted by Senator Warren that the housing couldn't be any new housing couldn't be held for more than 7 years, and there is a significant concern that will put more pressure on building new single-family homes and fix and flips. So there is, just as normal with politicians, the headline is one thing, and many of them don't even bother to read through the legislation, I would argue. And understanding what the long-term factors in because they always have these unintended consequences. So I think there's a lot to play into that. There's definitely some aspects that could very much help, but we want to watch what the details are on that so we don't hurt long term. Now, in the markets, the Dow is off 553 today. It's down to 46,863. We were above 50,000 about a week ago. So, yeah, that's a sizable decline. 10-year Treasury, not our friend. It's up to 4.239. We broke through the top barrier of 4.21. The next top line resistance isn't until 4.3. So we're a little concerned on that in the short term. Oil has been all over the place. Currently, we're sitting at 93.86. It's up about $5 a barrel today. The Bitcoin winter, the chill, the frost, maybe that has passed. Bitcoin is up and over 70,000 right now. Gold is down 40 to 51.39. So a lot going on in the market there. In particular stocks, we are seeing a pinch on banking investment stocks. One of the main reasons for that is there's been a lot of activity with private credit and devaluation of some of their assets, and that's putting downward pressure on even the big boys, Bank of America, Chase, PNC, Truist. They're all having really tough roads right now. Now, long term, it'll be interesting to see what's going to happen, but it's being driven by this private credit devaluation that's going on right now. So we're trying to keep up on everything for everybody. We'll keep updates going here. Give us a call. We'll help go through pre-approvals with you, loan opportunities, programs, what's going on in the market, how to seize the best opportunity. We've got a closing on refinances every day for the next 6 days. We helped a number of people out get in before rates came up. In fact, out of those 6, we are freeing up probably close to almost $3,000 in cash flow for those borrowers. In fact, one, we're helping them pay off the house early and save $400,000 in interest. Give us a call. We'll help you understand what the options are, lower payments, increase pay down to pay less interest over the life of the loan. 616-293-2189. Hope you have a fantastic afternoon.